Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 23rd COT report in 2015. As usual, we're going to start off with the changes in commercials positions. So here we go. As you can see, we've got NASDAQ on top of a list with a 54% change in commercials positions, 39 in large speculators. Basically just the opposite direction as we had it last week. So this time we have a bullish COT change signal. And if you remember, we didn't really have a extreme to talk about. And of course that did not change dramatically from last week either. So it's really the COT change signal that is present in the market at the moment. Silver. Let's move on to silver, where we have a 43% change in commercials positions, 49 in large speculators. It's an unquestionable bullish COT change signal. We had a larger change 3 reports ago. That was a bearish COT change signal. As you can see, it was a pretty effective one. Now we're expecting a bullish move. Opening the 5 years chart. So here you go. You can see small speculators as well. You can see that there's not a serious COT extreme at the moment. We are moving away from bearish extreme levels, as you can see, so we're not surprised at all to see prices going downwards. There's still a little bit of space left to really reach bullish extreme levels. You can see that on the chart pretty clearly. So in this case, we have a not long ago bearish COT extreme with a present bullish COT change signal. So maybe in the near term, the next few days, we would see a little bit of a rise, but in the longer run, still more lower prices to come. The Chicago wheat is our next market, where we have 37% changes, both in large speculators and commercials. Huge changes if you look at the 52 weeks time range on the chart over here. The largest change in the past 1 year. So it may have came a little bit late. As you can see, we already see a decline in prices, but anyhow, it's there, and I think it tells us something that commercials have moved from just above 60,000 contracts net long level and decreased their net positions down to roughly 26,000 contracts net long. Let's have a look at the 5 year chart and see how extreme the market is. As you can see, we are moving away from the bullish extreme level, and as we are, you can see rising prices. We had a decline last week, and we have this bearish COT change signal, but don't forget that extreme signals are larger, stronger signals, and in the medium to longer term, those are the signals that we should be looking at. Let's have a look at large speculators COT extreme, and all 3 markets that we're going to be talking about in this review now have all-time COT extremes in large speculators, and some, as you can see in natural gas, for instance, we have the all-time COT extreme also in commercials positions. It is, of course, an unquestionably large bullish COT extreme signal. And looking at the price chart, I think we're not surprised to see that happening. So I think it's a market that you should have your eyes on, definitely in the next few weeks, month, maybe. Don't forget, COT extremes may be present in the market for quite some time before we have a reaction from price. The New Zealand dollar is the next market. We had this extreme, the all-time, already last week. So we're just going to conclude that, as I said it in the previous review, these extremes may widen, of course, before we see a reaction from price. So we are seeing the further decline of prices, but having this all-time COT extreme in the market, I think we all should be getting prepared for a bottom to develop soon. And last but not least, we've got the soybean oil market with all-time COT extreme in large speculators positions and a huge 1,298 report extreme in commercials positions. This is a very, very large bearish extreme, but having this at such low prices is very interesting. We talked about soybean oil many times in the past few months now. I was always telling you how surprised I am to see this extreme matching up with this price chart. But anyhow, that's the case, and of course it tells us something. It tells us that producers of this commodity are selling at these prices. That's already a signal. Of course, let's not forget about the commercial capitulation. That is a possibility. I'll be very honest with you. I think it's not the easiest market. One thing's for sure, the extreme tells us something is going to happen to price. It was stagnating for the past few months now. So, and one of the ways it's going to burst out, in my opinion, and I think you should be analyzing this market in the near term. Okay, that is going to be all for this review. Of course, don't forget we have the COT charts page where you can look at all COT charts for free. But if you'd like to have a more in-depth and detailed COT analysis, then of course this is the page you should be looking at. I hope you enjoyed this review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.